Good afternoon, traders. Welcome to the More Analytics Afternoon Energy Podcast for May 15th, going into the 18th. To start off with natural gas. Hope everybody had a good week trading. Starting to climb up a bit here. We're going to get into the bullish formations that we're above in a minute. But again, I would just note that we're above this general consolidation here that's been going on for a month and a half. I don't really talk about moving averages much. They're really just on there for a visual, but they are all crossed and starting to turn up here, except for the last one, suggesting possible more longevity. The break above 276.90 projected this upward 115 ticks plus. And from 276.90, we have traded up to 298.20. And a number of other bullish calls in here. More recently, we broke above this line at 289.80, which I said projects this upward and 90 ticks minimum, 260 ticks plus maximum. That'll be shaved a bit to about 80 ticks and or 70 ticks, excuse me, and 250. So we've traded from 289.80 to 298.50. There are two possible exhaustion areas to contend with here at 298.50, at 301.60 to 303.60. But like I said, if this trades at 306.80, then that suggests that we're not in the last stretch of this move up and that this has more longevity. However, this time around on this, I'm more leaning towards this continuing, more so because of the basic structure over the past month and a half. We settled above this formation right too, this formation here as well. We fell back down through that decently. That's going to warrant a decent pressure to come in, as well as a decent failure back below this line right here, which is going to come in at 288, even at 6 o'clock p.m. Sunday. And the crude oil, I warned yesterday of range expansion today, which we saw overnight and into today, multiples of yesterday's range. The trade above 285.67 brought in $25.26 of strength. A number of other bull calls in here. That was from much lower for this run up here. Those are all off hold. And then more recently, the trade above 95.52. I said warned strength, as well as above 98.39. And then on 5.11, we left a minor bullish reversal below. And we rallied from 95.52 up to 105.79. Decent trade above this line right here is going to warrant a continued strength. That's going to come in at 106.60 plus 4.5 per hour starting at 6 o'clock p.m. Sunday. It's not something I necessarily lean against as a long low. If we break above there decently and back down through it decently, look for decent pressure to come in. The maintain gap lower on Monday would leave a minor bearish reversal above. And the RBOB, or unleaded gasoline, left a minor bullish reversal below on the day. And I said this morning that that was coming in strong, as well as going out strong yesterday on the close, despite leaving a minor bearish reversal above. Okay, and here the trade above 3 even 24 brought in 76.16 cents of strength. That was in the run up to here. Then we rolled back over. Then the maintain gap higher on May 11th. Left a minor bullish reversal below. And from the 359.78 open, we have rallied up to, well, we still haven't taken this out yet, 371, 371.58. Bear with me a moment. I just want to check something. Okay, so the decent penetration of this formation also warrants a decent strength, decent failure back below where that's going to come in at 367.84. -4 per hour starting at 6 o'clock p.m. Sunday. That'll warrant decent pressure. Decent failure below this formation right here, which is going to come in at 359.73 plus 16 per hour starting at 6 o'clock p.m. That will warrant a decent pressure for at least 10 cents minimum, 52 cents plus maximum. The maintain gap lower on Monday would leave a minor bearish reversal above. Okay, in the heating oil, we left a minor bullish reversal below today, which also negated the minor bearish reversal left above yesterday. I also said in this morning that this was coming in strong. At 420, we left a minor bullish reversal below warned about. We rallied 80.63 cents from the 344.86 open. A couple other bullish calls in here. Those are all off hold. And the trade above 372.33 and brought in 45.17 cents. That's off hold also. The trade below 410.82 wound up bringing 24.18 cents into this low here before leaving the maintain gap higher today. So that's on hold. And then decent trade above 413.62. It's going to warn 413.62 -4 per hour starting at 6 o'clock p.m. That'll warn a decent strength. If we break above there decently, back down through it decently, look for decent pressure to come in. A maintain gap lower on Monday will leave a minor bearish reversal above. Okay, in the Brent, at 420, we left a minor bullish reversal below. We rallied 24.7 from the 90.60 open. A couple of the bearish, another bullish call in here. Those are off hold. And then the trade above 1even.94, I said warned a decent strength, and we have traveled up to 109.75. Decent trade above this line right here is going to warrant a decent strength. That's going to come in at 109.31 -2 per hour starting at 6 o'clock p.m. Sunday. The maintain gap lower on Monday will leave a minor bearish reversal above. Into gas oil, we saw the range expansion warned about today. Negated the minor bearish reversal left above yesterday and left a minor bullish reversal below on the day. On 420, we left a minor bullish reversal warned about below. We rallied 280.25 from the 1023.75 open. And then more recently, the trade above 1175.42 brought in 51.58 of strength. I did say this was coming in strong on the day. We rallied from there. And we also saw the range expansion warned about, including Globex. Decent failure below this formation right here is going to warrant decent pressure. That's going to come in at 1150.84 plus 47 per hour starting at 6 o'clock p.m. Sunday. And the maintain gap lower on Monday will leave a minor bearish reversal above. The cadence going into Monday is the heating oil is the stronger of the three. The crude oil in the middle and the RBOB the weakest of the three relative to one another. Okay, thank you for watching. I hope you have an awesome weekend.